What's up you guys, I'm Dan, this is Frugal Not Cheap, and in today's video we'll talk about the continued collapse of the crypto market. So this year we've seen a sharp decline in risk assets. That includes, stocks, equities in my portfolio, but also out there something I don't thankfully have a lot of exposure to, or any exposure at all actually, is cryptocurrency. So the crypto market has seen very sharp declines, sharper than those that we've seen in equities. And late May I put out a video about the collapse of really kind of a major player in the space, the Terra and Luna cryptocurrencies. This is basically an algorithmic stablecoin Ponzi scheme that blew up, of course, as the line doesn't always go up. This collapse saw over $40 billion wiped out. They've since rebranded, and I don't know, some people are still putting in money into the new one and into Terra Classic. It's pretty crazy, but thankfully if we zoom out, really, this Terra Classic thing is still pretty much dead. Since I put out this video on Friday, May 27th, however, cryptocurrency values have continued to fall. In fact, Bitcoin fell from $28,576 down to $19,662 recently. And over the past 6 months, it lost about 54%. Now, with these sharp declines in asset values, there's also been a lot of contagion, where any parties that were leveraged, or that were basically Ponzi schemes, of course, and required continued growth in order to keep going. There's been a lot of failures, and therefore contagion, where these different parties are linked together. So the next big failure that I know about is called Celsius. This Celsius network, run by a guy named Alex Mashinsky, claimed that, he made a lot of claims that were really false. One being that he's sort of the inventor of voice over IP, which is basically just telephone calls over the internet. We've been doing that for ages using Google Voice, but before that there were some other ways to do it as well. Anyway, he claimed to be the inventor of that and fighting monopolies, and now he was claiming that he was fighting the big banks, and he was gonna that was the point of Celsius network, and it was going to be not a bank. But then they did exactly basically what a bank does without having to have the regulation. In other words, they would hold deposits. Although we found out later these were actually just unsecured loans per their terms, so yeah, that was pretty messed up. But the way they made it look like is that you would deposit your stable coins with them. You could earn ridiculously high APYs, or yields, of double digits on stable coins, which is crazy, or close to double digits. And then of course they did at least lend some money out. But if you're thinking that, taking deposits and then lending out in order to earn a higher yield and thereby be able to pay some interest sounds a lot like a bank, well, yeah. So they're saying we're not a bank, so we don't get regulated, but they're acting like a bank very much. To make matters worse, though, not only are they not regulated, but all of the so-called depositors actually don't have any of the protections that you would have with a regular bank. So with a bank, there is FDIC deposit insurance on your deposit, but with Celsius Network, they actually listed in their terms that your digital assets may not be recoverable, and you may not have any legal remedies or rights other than your rights as a creditor to Celsius. So basically, all of this stuff is just a loan, an unsecured loan to Celsius, and of course you're in the back of the line then if they have to restructure. And that's exactly what happened. First they froze deposits on June 12th, so no one could withdraw money, and we found out that in order to chase those yields that they needed to make the very high interest payments, that they'd been making some very risky bets. This included Terra's Anchor protocol, so if you want to learn more about Terra Luna, check out the last video that I made about that. Also Stakehound ETH and Staked ETH, ETH being Ethereum, and Stakehound and Staked ETH being different things. And from mistakenly forfeiting on restitution for the Badger DAO hack. I don't know all that much about them, but basically they were required to hold these special tokens in their account for a certain period of time in order to get paid back, and they didn't do that. They just moved them for some reason, and so then they were no longer eligible, or held claim to millions of dollars in restitution for this hack. Now, I've got a friend actually who works for a mutual fund company out in California who really ought to have known better. I feel bad for him, but man, he actually wanted to chase these double-digit yields offered by Celsius and bought some crypto, put it on deposit with them. Don't know how much, but it's pretty unlikely he's going to get it back. On July the 11th, Celsius filed for Chapter 11 bankruptcy. This does allow them to continue operations. It's a restructuring, but it's pretty unlikely that he's going to get his money back because they had, I think, $5.5 billion in liabilities that they listed against $4.something billion in assets. At their peak, they had managed as much as $25 billion in assets. So there's a whole lot of people out there that unfortunately are probably going to be out, as Celsius is sort of large institutional creditors were the first to be paid back, and in fact, they have paid back some of those creditors already. Another domino to fall from the Terra Luna collapse and the broader overall collapse in the crypto market is a hedge fund called Three Arrows Capital. This was founded by Su Zhu and I think Kyle or Kylie Davies, and these guys originally were currency focused. They were a Forex hedge fund. But over time, Su Zhu kind of got really enamored with the crypto space and really shifted the focus of the hedge fund into crypto, originally doing a little bit of arbitrage as Bitcoin would trade at different prices in different markets and that kind of thing. But later on, really piling on big in the space and eventually taking a huge $500 million bet or investment in Terra Luna. Of course, that thing got wiped out, which meant that they had to issue notice of default to their creditor, and they'd actually borrowed that entire sum, more than that actually, from another not bank called Voyager Digital. So Voyager Digital, well, basically these things look like Ponzi schemes to me. They were offering also double-digit interest rates on stablecoin deposits. Of course, how the hell that's going to happen? Not only that, but they also issued a USDC MasterCard, which would pay 9% cash back, essentially. They claim to have had as much as 2.7 million users. And the way that they said that they were able to pay these exorbitant interest rates is because they were really, really careful about counterparty selection. So they would only lend out to sort of the best of the best. And they were supposed to be very, very low risk. In fact, they got Mark Cuban to say that it was as close to no risk as you could get in the cryptocurrency market, which is ridiculous. I'm pretty disappointed in the way Mark Cuban's been acting lately with regards to crypto. But I don't know, whatever. I don't really know much about him. It's just kind of weird to see someone that's that wealthy kind of shilling for basically very fraudulent companies, right? Which should have been very clear that these guys were not, not on the up and up. Anyway, so even as they're saying they're really, really selective and good about counterparties, they had no counterparty diversification, right? They invested, really, the bulk of their money was just within two firms. One was Alameda Research, and then their main creditor, of course, was Three Arrows Capital. And then, of course, Three Arrows Capital then put the bulk of that loan right into the anchor protocol, Terra Luna, then collapses, domino effect, and of course, Voyager Digital has also filed for Chapter 11 bankruptcy. Things are a little bit more spicy with Voyager Digital than with Celsius in a way, because not only did they, on the one hand, really misrepresent to their users that they were making deposits. Like the app actually would say that this is your crypto, you own this. And on their website, their marketing would say your portfolio. But again, just like with Celsius, supposedly these were all unsecured loans. You don't actually own any of the crypto. It is now on Voyager Digital's balance sheet. So on top of that, though, they partnered with this bank to supposedly offer FDIC insurance in a way. But of course, that FDIC insurance was only for US dollars, and it would only apply if the bank itself had gone under, the partner bank. But of course, the partner bank is not going under. It's Voyager Digital that is insolvent. So that was really, also a misrepresentation and also not very helpful for, the average user. Not to mention Chapter 11 bankruptcy is not as friendly to unsecured lenders, which their lawyers are claiming that you are. Whereas, these guys also represented themselves as basically a securities broker, right? A brokerage. And if they are, in fact, a brokerage, then they would have to go through a different kind of a process, a liquidation, in which case they would not be able to continue operations. And also, which would grant much more favorable terms for depositors, for, well, basically the buyers of these securities, right? But yeah, so they're claiming it's they're going through Chapter 11. They're trying to go through Chapter 11, and this would also allow them to continue operations. And their sort of plan to go forward is to basically mint more coin, or issue more shares, basically. But yeah, it just boggles me that anyone thought that these things could be legitimate. Like, how are you really going to get a 9-10% yield on a so-called stablecoin? What? I'm just completely flummoxed by how ridiculously sort of bald-faced fraudulent these guys are right on the surface. And then second, how anyone could fall for it. And then third, just how much money we're talking about in here, right? We're talking about, what was it, like $40 billion with Terra Luna. We're talking about $27 billion with Celsius, over $1 billion with Three Arrows Capital, between $1 and $10 billion with Voyager Digital. So these are huge sums. And I don't know, I find the whole thing to be just, quite a spectacle, but also really, really sad. So, hopefully, if anything, if even one person was dissuaded from quote-unquote investing in crypto by any of the content that I've put out, then that probably makes me happy. Not to say, of course, that you couldn't have gotten lucky and bought right before Elon tweeted about Doge and made a ton of money and then hopefully gotten out. Not saying that. Like, any gambler can get lucky, but man, this space is just full of fraud. There's no intrinsic value to any of it. It's just a bunch of nonsense to me. So yeah, I'm going to continue to stay away. And yeah, that's that. So hope you liked today's video. Hope you enjoyed it. Please hit the like button if you did. Consider subscribing, and I'll see you in the next video.